Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first thing I do is teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from either an earnings announcement or some other related news event. These gap ups and gap downs in stocks create opportunities, and the opportunity for traders is when they can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. We're looking at one of these on the screen right now, but we'll get to that in a minute. In the course, traders learn the specific criteria we're looking for, which stocks it works the best with, what type of volume are we looking for, how much of a gap higher or lower are we looking for, and most of all, they learn how to calculate these specific price levels. All this and a whole lot more is taught in the course at Lazy Gap Trader. Now, the other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out to traders this morning. As you can see, it arrived at 9:01 a.m. and that's Eastern Standard Time. This morning, we had 5 potential morning gap trades on the board. We're only interested to take the trades that have the highest probability of success. That means the highest probability of profit. If a stock does not hit the specific level, the specific price level that we learn how to calculate in the course at Lazy Gap Trader, then we don't want the trade. We only want the trades that hit the high probability price, which means we're likely to get the price reaction in the other direction, creating the type of profit opportunity we're looking for. Let's take a look at the one that did hit its level today. It's Omega Healthcare, OHI, gap lower. Support levels are $28.10, $26.26, and $24.22. Stop and profit target is about 25 to 45 cents. These are minimum profit targets. I'm going to talk more about that when we dig into the chart in just a second. So now we're back looking at the chart of OHI. You can see here that the stock closed yesterday at $30.97. The stock was gapping lower at the open, creating the opportunity we're looking for. The stock opened around 30 and immediately started trading lower. Now, something very interesting happened with this stock today. You can see here in the third 10-minute candle of the day, the stock made a low of $28.13. That's just 3 pennies above the level that we were interested to buy the stock, looking for that price reaction in the other direction. In my course, traders learn exactly what happens when a stock comes up just short of a level and has that type of price reaction that we were looking for. It changes the odds. It changes the probabilities of the trade. It's not to say the trade won't work, but it's not the same trade as if it did come into that price level straight away in that same candle, the third 10-minute candle of the day. So you can see what happened. The stock rallied off that level at $28.13, and then it also came back down into the $28.10 level, went slightly below that level, making a low of $27.87, still well within the stop loss limitation that was outlined in the email at 9 o'clock in the morning. And then look what happened. The stock turned right around and ripped higher and has been trading higher for a solid hour ever since it hit that lower level at below $28.10. Now, it just hit a high of $29 in the current candle. That's a 90-cent bounce higher on a $28 stock. That's a tremendous scalp trade. That's a tremendous day trade. Day traders are looking for base hits and doubles, and this one even qualifies as better than a base hit or double. A 90-cent bounce off that level is a tremendous trade for a scalp trade opportunity. Listen, traders, you can learn how to do this for yourself each and every day. Everything you need to know is taught in the course at Lazy Gap Trader. This is a strategy that you can use for the remainder of your trading career. This is just one example of a morning gap trade. We have morning gap trades just about each and every day. Sometimes we have one, sometimes we have 3, 4, or 5. You never know what the market's going to hand you. Therefore, when you know how to calculate these specific price levels, it's an opportunity that enables you to find trades each and every day. If you want to learn more about how this is done and what it can do for you, come over to Lazy Gap Trader, learn everything about the course, and then learn everything about gap trading, because it's a strategy that you can use each and every day for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.